Hey everyone, and welcome to another deep dive with us. Today we're taking a look at the Indian FMCG sector, specifically Godfrey Phillips India Limited's Q2 results for FY25.
Yeah.
And we've got a lot to dig into. We've got their company announcements, we've
hmm
got their financials, we've
Yeah.
got an earnings
A
presentation.
whole bunch of stuff.
So let's just jump right in. So for those who might not know Godfrey Phillips, maybe give us a quick overview of who they are.
So Godfrey Phillips, or GPIL as they're sometimes known, they're a pretty big deal, not just in India, but globally as well.
Yeah.
Part of the Fortune 500
Wow.
and also part of the KK Modi Group. You probably know them for their cigarettes. They're a big player in that market.
Right.
But they're also involved in confectionery and retail.
Hmm.
So kind of a diverse portfolio there.
Okay, so more than just cigarettes. But I guess what we're really interested in today is how they're actually doing as a company.
Hmm.
And one of the things that really jumped out at me in preparing for this deep dive is this shift they're making away from their 24/7 retail business.
Yeah, they're getting out of that entirely. And on top of that, they're actually partnering with Ferrero,
Oh, wow.
the chocolate company, to distribute sweet treats in India.
Interesting.
So kind of a big move there.
Yeah, so lots of strategic moves happening, but we'll get to those in a bit. First, let's just take a look at their overall performance this quarter.
Yeah, good place to start.
How do they do?
Well, their consolidated gross sales value reached a pretty massive 6,668 crores.
Okay.
That's a 23% increase year on year.
Whoa. Okay.
Pretty substantial growth there.
Yeah, that's a pretty serious increase. So their sales are up big time. But what about their profits? What's the bottom line looking like?
So their net profit, before we consider an exceptional item, landed at 522 crores. That's up 14% year on year.
Okay, so it sounds like two big takeaways then.
Yeah.
Growth
Yeah.
and profitability. But for someone who maybe isn't, super familiar with financial statements and all that, what does this actually tell us about how healthy Godfrey Phillips is as a company?
So these figures are definitely strong indicators of the company's health. Clearly, they're on this trajectory of growth and they're making good profits.
Mm-hmm.
But to really grasp the full picture, we need to kind of dissect those numbers further.
Right. Okay. So let's start unpacking some of those details. What jumps out when we look at, the breakdown of their revenue and things like that?
So if you look at their revenue, there's a distinct split between domestic and international business,
Okay.
and also between their tobacco and non-tobacco operations.
Mm-hmm.
What really pops out is their export of unmanufactured tobacco,
Okay.
which reached 766 crores in the first half of FY25 alone.
Okay. So that's a significant,
Yeah, it's a big chunk of their revenue.
big part of the business. And what about those profit margins? How efficiently are they turning those sales into actual profit?
Well, their gross profit margin is sitting at 16.8%, which means for every 100 rupees of sales, they're keeping about 17 rupees as gross profit before covering other expenses.
Got it.
Now, their net profit margin, which factors in all those other costs, sits at 7.1%
Okay.
before we consider that one-off item we talked about earlier.
Right. But I think for a lot of people who aren't, financial analysts, those percentages might not mean a whole lot. Are those good numbers or those bad numbers? What are we looking at here?
Those are actually quite healthy margins for a company in the FMCG sector, especially one like GPIL that is heavily reliant on the often scrutinized tobacco industry.
Right. And speaking of that one-time expense, what was that all about again?
Right, so that was a loss of 5,960 lakhs,
Okay.
and that's tied to their decision to exit the 24/7 retail business,
Okay.
which is a pretty interesting move. It gives us some insight into their strategic thinking.
So they're kind of like
Yeah.
reshuffling their portfolio, focusing on what they think will be most profitable down the line.
Absolutely. Streamlining and focusing.
And they're also navigating some, I guess, changes in regulations like the Finance Act of 2024, which impacts their deferred tax liabilities. So for our listeners who aren't tax experts, what's the takeaway there?
I don't think most people want to get into the weeds of tax law.
Right.
But the key takeaway is that even when a company is performing well, external factors like government policies can come into play and impact their financial picture.
Okay, so we've got a company here that's performing well financially, growing revenue, and strategically adapting to the landscape. But let's focus in on, I guess, what we think of as their core business. Cigarettes. How are their domestic cigarette sales doing?
Domestic cigarette sales are actually looking very good. The numbers are trending upwards both quarterly and annually.
Okay.
So if you picture a line graph, it's definitely climbing steadily.
So is this growth just a result of, more people in India buying cigarettes in general, or are they actually, taking market share from their competitors? What's going on there?
So there's a few things driving this growth. First, their partnership with Philip Morris International has deepened, and PMI actually handles the manufacturing and distribution of Marlboro cigarettes in India.
Right.
So by leveraging that global brand power
Hmm.
and the existing networks they've got, they're able to reach a much wider audience.
Makes sense.
It's a smart move.
Yeah, kind of turbocharging their growth by tapping into that.
Exactly.
And are they just kind of, I guess, riding that wave, or are they actively trying to expand those cigarette markets?
They're definitely actively trying to expand, venturing into new cigarette markets both in India and internationally.
Okay.
So they've got this expansion strategy to reach new customer segments.
So they're not just content with their current position, they're really actively pushing to get those sales numbers up.
Yeah, they want to grow.
But cigarettes aren't their only game anymore, right? They've been diversifying beyond that.
Not at all. They've been making some big moves to diversify beyond tobacco, which of course comes with its own risks and rewards.
Yeah, for sure. I mean, we talked about it earlier, that partnership with Ferrero to bring chocolates and candies to India. That's a pretty sweet deal, literally.
It is a sweet deal, and they're really capitalizing on that existing distribution network to enter a completely new market.
Smart.
And early signs suggest it's paying off.
That's great. But of course, they're making those tough choices too, like exiting the 24/7 retail business,
Right.
which led to that loss that we discussed earlier.
Yeah, it's a balancing act, right? Streamlining operations, focusing on their strengths, and really aligning everything with that long-term vision.
Okay, so we've got a company that's financially sound, growing that core tobacco business, and strategically diversifying.
Mm.
But they're also going beyond just profits and looking at their people and how they impact the world.
Absolutely. Their sixth consecutive Great Place to Work certification speaks volumes about their commitment to creating a great work environment for their employees.
Yeah.
And that's huge.
We'll talk more about those aspects in the next part, but let's shift gears for a moment and talk about some of the changes in GPIL's leadership.
Yeah,
Some new faces have come in recently.
absolutely. So they brought on Mr. Avtar Singh Manga as an independent director. He's got a ton of experience from the banking and financial services sector, which could be really valuable as GPIL continues to grow and expand.
Mm-hmm. And of course, a new CFO in town, Mr. Vishal Dhariwal taking over for Mr. Sunil Agarwal, who's moving into more of an advisory role.
Right.
And then they also appointed Mr. Pumit Kumar Chilaramani as the new company's secretary and compliance officer.
Oh, yeah.
So a few new faces and key positions. It'll be interesting to see how these changes maybe influence the direction of the company.
For sure. Raises some interesting questions about their future strategy and their focus on things like corporate governance.
Okay, so we've covered a lot in this first part. Their overall performance, strategic moves, those leadership changes, diversification efforts. But there's definitely still more to explore.
Absolutely. There's a lot more to uncover.
So in the next part, we're going to really dive into those financial details, looking at those key ratios and metrics that'll help us understand just how efficiently they're operating, what their strengths are, what their weaknesses are. So stay tuned for that.
It's going to get interesting.
Welcome back to our deep dive into Godfrey Phillips, India Ltd. We got a taste of their performance last time, their growth, and some of those strategic moves they're making.
Right. We saw those solid gross sales value and net profit figures, how they're diversifying, and their commitment to things like sustainability in their employees.
But I think we can both agree sometimes those raw numbers can be a bit overwhelming. It's like staring at a giant spreadsheet.
Yeah.
You know there's important stuff in there, but it's tough to see the full picture.
It's like trying to appreciate a masterpiece from a mile away.
Yeah.
You get the general idea, but you're missing all those crucial details.
Yeah. Exactly. So in this part, we're grabbing our financial magnifying glass and zooming in on those details. We're going to explore some of those key ratios and metrics that can give us a clear understanding of GPIL's financial health.
We're going to translate those statements into a story that anyone can understand. How efficiently are they operating? What are their strengths? What are their weaknesses? What does it all mean for their future?
No need to be a financial expert to follow along. All right, so where do we start our detective work?
Let's start with profitability. We already touched on their gross profit margin and net profit margin.
Yeah.
Let's dig a little deeper.
Remember, those margins tell us how much profit they're making for every 100 rupees of sales.
Right. Higher margins generally mean better efficiency and pricing power.
Okay. And for GPIL, where do those margins sit?
Their gross profit margin is hovering around 16–17%, which is decent, especially for the FMCG industry.
Okay, so that means they're keeping a good chunk of their sales revenue after covering the costs of actually making those goods?
Yeah. But remember, their net profit margin was a bit lower, right around 7%. There's a gap there.
Right, so what accounts for that difference?
Well, net profit margin takes all expenses into account, not just the cost of goods. We're talking operating expenses, salaries, marketing, rent, the whole 9 yards.
So it paints a more complete picture. Okay, so is 7% a good net profit margin then?
It's not bad,
Yeah.
especially considering that one-time loss they had from leaving that 24/7 business. But it does suggest there might be some room for improvement.
Okay, so profitability check. What other ratios can give us more clues?
How about return on equity, or ROE? This tells us how well they're using shareholder investments to generate profit.
So higher ROE, the better they are at managing that money.
Exactly. And GPL's ROE has been consistently above 20%,
Oh, wow.
which is pretty impressive. A good ROE is usually around 15%.
So they're exceeding expectations there.
Absolutely. They're delivering a great return on investment.
Okay, that's good news. But what about their debt? How much are they relying on borrowed money?
Good question. Let's look at their debt-to-equity ratio. This shows us how much debt they're using compared to their equity.
So higher ratio means more risk.
It can. A lot of debt can make a company vulnerable, especially if earnings take a hit. But it can also be a sign of strategic growth if they're using that debt wisely.
It's all about balance.
Right. So GPIL's debt-equity ratio has been pretty stable, around 0.4.
Okay, so they're not over leveraged.
Note they're taking a fairly prudent approach.
So they're profitable, not drowning in debt. That's good. But what about cash flow? We talked about it briefly before.
Yeah, cash flow is crucial. It's the money coming in and going out. It's the lifeblood of the business.
So what should we be looking at when it comes to GPIL's cash flow?
Their operating cash flow. This shows how much cash they're generating from their main business activities.
So that's money from selling cigarettes, confectionery, all that, not from selling assets or taking on more debt.
Exactly. And a strong operating cash flow means a sustainable business.
So how is their operating cash flow looking?
Very healthy. Consistently positive and growing over recent years.
That's reassuring.
It shows they're converting those sales into actual cash. Good working capital management.
So they're not just profitable on paper, they've got the cash coming in.
Right. And then there's free cash flow. This is what's left after covering all their essential expenses.
So it's the money they have for things like dividends, buying back shares, or even making acquisitions.
You got it. And GPIL has been generating a good amount of free cash flow, giving them lots of options.
So they can reward investors, invest in their own growth, or even go shopping for other businesses.
Exactly. They're in a good position.
Okay, we've covered a lot of ground here. Profitability, debt, cash flow. What's the main takeaway for our listeners?
Based on these metrics, Godfrey Phillips looks like a financially sound company. They're profitable, generating strong cash flow, and managing their debt well.
And we shouldn't forget their investments in people, communities, and sustainability. It suggests a long-term vision.
Absolutely. Of course, there are always risks, but financially, Godfrey Phillips seems to be in great shape.
So whether you're an investor or just someone interested in the Indian FMCG market, Godfrey Phillips is definitely worth watching.
Now, before we wrap up this part, there's one thing I find particularly interesting.
Okay, I'm intrigued.
Their investment in unmanufactured tobacco exports. This segment has been a big contributor to their revenue and profits.
We mentioned it earlier, but why is it so interesting?
It shows their strategic focus on international markets. They're tapping into that global demand.
So they're not just an Indian company, they're a global player.
Exactly. It's smart because it diversifies their revenue streams and reduces their reliance on any single market.
So while their cigarette business is mainly in India, they're pulling in a lot of money from overseas markets with these tobacco exports.
Yep. It positions them well to take advantage of growth opportunities worldwide. A big advantage in today's economy.
So as we move into the final part of our deep dive, remember Godfrey Phillips is a complex company, playing on both the Indian and the global stage.
In part 3, we're going to look beyond just the numbers and explore their commitment to sustainability, especially their work with communities and the environment. We'll see how they're balancing profit with purpose. Stay with us.
Welcome back. We've covered a lot of ground with Godfrey Phillips India, Ltd, their financials, their strategies, and their moves to diversify. But now, in this last part, we're going beyond the numbers.
Right, yeah.
And looking at their commitment to people and the planet.
It's becoming more and more apparent that companies can't just focus on profits these days.
Yeah,
Consumers, investors, even employees, they all want to see companies that align with their values
exactly.
and that are actually making a positive impact on the world.
And Godfrey Phillips seems to get that, especially with their CSR work, which we talked about a bit earlier.
Yeah.
It's not just lip service, they're actually taking steps to make a real difference.
Their community development program for Burley tobacco farmers is a great example of that.
Yeah.
Going beyond just checking boxes.
Right.
It's a whole initiative aimed at improving the lives of these farmers who are, let's be honest, a really important part of their supply chain.
Yeah, and for those who might not know, we're talking about farmers in regions that are often hit by drought, facing all sorts of challenges,
Yeah.
seasonal work, low income, limited access to essential resources. It's tough.
Absolutely. And Godfrey Phillips recognized that supporting these farmers wasn't just, the right thing to do ethically. It was
hmm
smart for their business, too.
Because I guess without those farmers, there's no tobacco, no
Right.
high-quality tobacco to make their products.
It's about recognizing that connection between business and society.
Right.
So they took a broad approach, tackling access to safe drinking water,
hmm
education, healthcare, and even environmental sustainability.
They've installed those RO plants for clean water, created biodiversity parks,
Yeah.
organized health camps, even offered scholarships.
It's a really comprehensive program.
It is, and it sounds like it's having a real impact.
Yeah. The results are impressive. Less deforestation, more greenery, higher crop yields, even a decrease in child labor in those areas.
Huge.
It's about creating a win-win
Right.
where the company's success is linked to the well-being of the whole community.
So they're not just focused on the bottom line. They're
Right.
looking at that broader social and environmental impact.
And aligning with those UN Sustainable Development Goals adds another layer of accountability.
Right.
It's about doing good, but doing it in a way that meets global standards.
Exactly. It's not just doing good for the sake of saying you do good. It's about actually making sure it's meaningful. But let's not forget about what they're doing within the company itself,
Right.
like creating a great work environment for their employees.
Absolutely. That Great Place to Work certification 6 years in a row
Mm.
shows how dedicated they are to making a positive and supportive workplace.
It's about recognizing that happy employees equal a successful company.
Yeah, they're investing in training and development,
Mm-hmm.
promoting well-being, recognizing achievements.
It all ties back to that idea of sustainable growth, right? It's about people, the planet, and creating long-term value for everyone involved.
Godfrey Phillips is setting an example, showing that profits and positive impact can go together.
So we've gone on quite a journey with Godfrey Phillips India Ltd.
Yeah, we have.
We've looked at their financials, their strategies, their commitment to sustainability, their people-focused initiatives.
It's been a really interesting deep dive.
It has, and it's a story of growth, diversification, and a commitment to building a better future.
Absolutely.
So as we wrap up, what's the big question we should leave our listeners with?
What other innovative approaches will Godfrey Phillips take to stay successful? Will their focus on sustainability, their people, and their ventures into new markets be the keys to their future?
Those are great questions to consider as we all watch the Indian FMCG sector evolve.
Yeah, it's a dynamic space.
We hope you've enjoyed this deep dive and gotten a better understanding of what makes a company successful in today's world.
Thanks for joining us.
Until next time.